we created about $40,000 of extra equity. And we went to the
Isn't that
bank and
cool?
said, will you give us a second mortgage on this property? And then they did. And so we were able to take, I think, about 25 or 30,000, and we were able to take that as a second mortgage and put it down on another property. So creating that value allowed us to create that instant equity that we could go then use as either collateral or a second
Yep.
mortgage to
Yep.
continue to expand and buy more. So it's really a win-win to be able to do that. So I love that idea. I've done it, and it really works.
Casey Franchini with Brick by Brick Wealth here with Anna Kelly REI Mom filling in today for Michael Zuber while he's out of town. And today we're going to talk about how you can create value and cash flow in your property. So Anna Kelly, why don't you start us off?
Great. It's so good to be here with you. We got to do this last time Michael was traveling a year ago.
So
So,
fun.
so fun. And we thought we'd shake it up a little bit. And, we talk a lot about buying properties and what to look for. And I think we can kind of start it out with that. One of the things that I really try to get people to think about when you think there are no deals out there, because we hear that a lot. And to be honest, it's been a really tough last couple of years for finding deals that make sense for a lot of people's financial goals. And so when I was in private banking, we would talk to our clients about what their investment goals were, because a lot of times we find that whether you're investing in real estate or the stock market or, other types of things, people kind of get the cart before the horse and they think this is the kind of property I want, but they don't really think about, is that going to move the needle on my primary financial goals? And so I always try to get people to think about where you are in your phase of life. Your number one priority? Is it you need more income and cash flow? Or is it you need more growth and appreciation for the future? Or is it that you've already built that income and appreciation and now you need to preserve what you have? And the last couple of years, it's been really tough for people to find both properties with a lot of upside, unless they need a lot of work, or properties that cash flow, because both prices and interest rates have both risen at the same time. So high prices and low interest rates is fine. High interest rates and low prices is fine. But when you have both, which doesn't happen that often,
No.
it's really hard to create cash flow. And it's sometimes hard to create equity unless you're doing major renovations. And major renovations is, quite frankly, how I started out, having to create that value. It's called value add. And so, there are deals out there to be done, and that's where there has been opportunity. But some people are like you and I, Casey, like, we're busy. We have 4 kids. I have 4
Yep.
kids. You've got a couple kids. They're in sports and you're gone, and nights and weekends. And so it becomes harder and harder to do that without, having the money to pay contractors. But all that to say, this has been a market where, when there's a lot of volatility and it just seems like it's been a couple years of hard to find deals, that you've got to be really clear on what your financial goals are. And if you can't find the kind of deals that meet your number one bucket, then and only then do you go to deals that hit number 2. So for example, if you need more income, don't do deals that don't cash flow unless you really can't find and you've exhausted all the ways to create cash flow. Then and only then do you go to the value add model, where you can create some equity to then hopefully buy some properties in the future that cash flow. Or if you want equity and appreciation, don't pay retail for a property that is, like new or new, because it's not going to appreciate and doesn't cash flow. It's fine to do that if you're in asset preservation mode, because you're buying something that's going to hopefully preserve its value. So it's really important to get your buy list correct based on your financial goals. But with that said, and we talk about all the time on this channel, where to find opportunities, and maybe we can do another video on that a little bit later today. But one of the things that I think a lot of people miss is that they don't really maximize their current portfolio, Casey. And so,
Right.
I'm doing a lot of thinking about and have over the last couple of years, where I've done far fewer deals in the last couple of years than I've done in my entire, 25 years, 26 years at this point, real estate investing. And there's really no shame in that, right? And so I think it's important to let people know you're not always going to be able to find deals. There are deals in every market, but not always great deals. And so that doesn't mean you sit on your, hands, or you twiddle your thumbs and do nothing. What I've really done is say, how can I maximize value and income on my existing portfolio? And what I have found in working with a lot of consulting students is that a lot of people just kind of get their properties, they renovate them maybe once, and then they just kind of set it and forget it. and they're leaving a lot of money on the table by not updating those properties, not keeping them current with what the current market demands, not figuring out how to make things more cost
Yeah.
efficient and create more income. And when you do things that create more income, they also create more value. So it's a win-win. So yeah, tell me a little bit about what you're doing on your existing portfolio to create
Yeah.
that value and extra cash flow.
And I think it's a really good topic because, I help new real estate investors with their first property. That's kind of the people that I talk to every day. And a lot of people put themselves in this box of real estate has to be done a certain way. This is how Bigger Pocket says it. This is how all the books say it. And if it's not this way, then it's not possible. And then people will say there's no deals right now, that nothing
Right.
cash flows. And they're trying to analyze it based on the best case scenario model. And that's not always the case. Like like you said a minute ago, we're in a time of still high interest rates and high prices, and the demand is high. Like, when do you get that kind of unfortunate trifecta of it's hard at all angles? And
Hmm.
we haven't bought a lot of properties, and I haven't looked for a lot either, just because we're in different stages of our life, doing different things as well. And I think people have to understand that there's there are ways to make money in real estate a lot of different ways. And it isn't just the textbook style that, Brandon Turner spells out in his beginner real estate books. And that's what people look for. They're looking for the specific, buy something that's heavily cash flowed in this perfect scenario, and it doesn't always exist. So you may
Hmm.
have to look for other ways. If you are an existing, investor and you already have properties, you have to look for other ways to increase the value of an existing portfolio. And I'll be honest, Anna, like I look for those opportunities when I first buy my property. I'm looking for in the
Yeah.
future, if the market changes, or how can I create value to this property. Of course, I want the best of both worlds. I want cash flow and I want appreciation. I want both of those things. And you can have both of those things, but it's not always going to be today. You're not always
Yes.
going to get cash flow and appreciation day one. And a lot of
Yes.
people look for that. And you have to remember, I mean, not you, but people have to remember that the appreciation will come. It will
Hmm.
come. It will come. You just have to wait. And that's the beauty of real estate, is that it's all
Yeah.
but guaranteed. As long as you buy in a decent area and it's not going downhill, you will get
Yeah.
the appreciation. So for our properties, and what I kind of teach my students, for me, I say the cheapest value add that you can do to an existing property that gives the best value, in my opinion, is converting a room into a bedroom. And a lot of properties, so a lot of houses that cash flow, if you're talking single family, they are usually a single story house. They're fairly small, just a couple of bathrooms. We're not talking a 3,000 square foot Texas house, although I
Yeah.
know in Texas they have those that cash flow.
Everything's bigger and better in Texas,
Everything's
Casey.
bigger and better. I know.
I'm from
But
there, so I'm a little
yeah,
biased.
my mom's whole side is from there. So house comes to mind. But a lot of houses have like a front room, like the front sitting room, like living room, or they'll have a formal dining room. And even in the new builds nowadays, they're taking all that out. If you
Hmm.
look at all the new builds, I love Colorado, and I'm always looking at all the new things. It's just a great room. And their houses are massive, 4,000 plus square feet, but there's no separate living room and no separate dining room anymore. It's all in this big room. So it's not, too weird to think, well, what if I just took that, formal dining room or formal living room, and I put a wall up and I added a door? I mean,
Yeah.
you're talking $2,000 to have somebody do that with materials,
Yeah.
approximately. And it would increase the equity in your home, because now you just went from a 2 to a 3 bedroom, or a 3 to a 4 bedroom, and you can
Yes.
add another couple $100 a month in rent for it's very minimal cost. So that's my favorite, easiest value add.
Yeah, I really love that. And to your point, it's even easier to do now, especially if you've got a big kitchen, living room area where you can knock
Mhm.
down a wall and put a really nice big island. In fact, when we bought our house right after the COVID era, so we got a really great rate, but we had this little tiny, big house, big living room, teeny tiny kitchen, and teeny tiny dining room, and everything else was big. So we kind of bumped out a wall that went to a back porch. So it was already had covered roofing. We just bumped it out a few feet,
Nice.
and we added a huge island where we could fit all six of us. And so it's a big open floor plan, and we hardly ever eat in our dining room. We eat most of the time in our at our kitchen island. And so if you've got some room to add a really nice island kitchen, then it basically looks like a new home. So people feel like it's modern and it's updated. And even that doesn't cost, too much money.
Yeah.
But one of my very first 4 units that I bought, the downstairs apartments were the downstairs units. We actually house hacked upstairs, and then we started learning how to be landlords on this property. And that was the first thing that popped on my mind is you go to this living room and there's this huge formal dining room, but it's all walled in. It's off of the living room, and you had to walk down a hallway to get to the kitchen, which was in the back of the house. So you'd have to walk all the way around to the dining room. And I thought, why don't we make this into a second bedroom? It was huge. And we
Yeah.
converted, we did exactly that. We basically added one wall and a doorway and made it a second bedroom. And I think we got about $300 or $400 a month more for the 2 bedroom than the 1 bedroom. So then it was like, okay, that worked real well. Let's do it on the other side. And so that's especially in older homes. We were in central Pennsylvania. A lot of our homes were built from 1900 to 1940, and they were big single homes or
Yeah.
duplexes that then were converted into 4 unit buildings. And so, especially if you're in an area that has older homes, these dining rooms were humongous compared to today. So they can make some nice sized bedrooms. So I love that. And to your point, it creates cash flow, but it creates a lot of value instantly. It's what we call forced appreciation
Of course. Yeah.
in multifamily. And so what we were able to do is we were able to cash flow, because cash flow was our number one goal at that point. But we were also able to, once we did that to the 2 units on the bottom, we created about $40,000 of extra equity. And we went to the
Isn't that
bank and
cool?
said, will you give us a second mortgage on this property? And then they did. And so we were able to take, I think, about 25 or 30,000, and we were able to take that as a second mortgage and put it down on another property. So creating that value allowed us to create that instant equity that we could go then use as either collateral or a second
Yep.
mortgage to
Yep.
continue to expand and buy
Love it.
more. So it's really a win-win to be able to do that. So I love that idea. I've done it, and it really works.
Yeah. There's another one that we haven't done it, but we're always looking to do this, and we could. So a lot of properties in Memphis, they're 3 bedrooms and 1 bathroom. Nobody
Yeah.
really wants a 1 bathroom, but that's what they are. So people are used to it. But sometimes you can find these houses that on the other side, or they're like a 3, 1.5, even a 3, 1, 3,
Uh-huh.
1.5. You can find these houses that have a bathroom, but right next to it on the other side, in the other room is a really large closet. So what some people do is they will take out a part of that closet and they will put a stand-up shower. Sometimes
Yeah.
it looks forced, but there is a floor plan out in Memphis that's very, they just like the same builder must have built half of Memphis, you know, and people are doing that all the time, adding that whole second bathroom. Well, 3/4, but no one says 3/4 anymore. They all say full. But taking part of that closet, and now not just have a toilet, but you have a toilet and a shower. It's an extra, it costs extra, but it definitely gets more rent and sells quicker too when you're ready. We haven't done that yet, but I'm always looking for if that's a possibility down the road. If I do
Yeah.
want to create some extra value, can I do that? So I
Yeah,
prefer properties that
absolutely.
have that ability.
Yeah, and we have a lot in this area too that have 2 bedrooms like this, and then they have a closet in the middle that works for both bedrooms. And what we've actually
Okay.
done as well is we've taken out the closet completely and put in a half bath in there, depending on how big it is, and then just build a separate corner closet. So
Yep.
you can do that as well to create a second bathroom. And for the first time we did it, I thought this is going to look really strange, but it really didn't. It was like we added a closet near the doorway, and so it just made it a little smaller bedroom. But in these
Like the
places that
Jack and
have
Jill
big
bathroom.
bedrooms, exactly, exactly. And so people really like that. The
Yeah.
other thing that you can do is, turn those long-term rentals into short-term rentals or
Oh,
mid-term
yes.
rentals. And so
Hmm.
we've actually done that in our apartment complexes. I've got 5 short-term rentals that are vacation rentals that we use as second homes, and basically they're in vacation areas, so they're areas that have had consistent travelers for decades that are top of mind, that they want to rent a property at the beach, at the lake, etc. And so those are like no brainers. We can do a short-term rental there. But we've also, in our apartment complexes, anywhere from a 20 unit up to a 200 unit, we've turned a couple of the units into short-term rentals. And so, we might take a 12 or $1,300 a month unit, and now we're getting two, three, $4,000 a month for that unit. And that really works best if you're in an area that has low supply and high demand. And so you keep your rentals
Yeah.
full, but you've also got a lot of people that travel. And so we're really close to a major cancer treatment
Nice.
hospital, a major research hospital, a major children's hospital in Hershey, Pennsylvania, and the Ronald McDonald houses are full. And we have a lot of traveling nurses. We have a lot of doctors that come for a year or two in an ER contract. And so we've turned a few of ours into furnished rentals and get a lot more cash flow. Now, we don't do that to our whole portfolio, and you've got to really know your market well, and you've got to know that you've got a consistent pool of applicants who are looking for those short-term to midterms. But that's another way to really create value. And so I've done that in 5 of our units. And then another thing that I haven't personally done, but I know a lot of people are doing it with some success, depending on the market that you're in, is what's called pad split. So you can take a house,
Yes.
and basically they come in, you pay for the renovations, but the pad split company comes in, they make it into more bedrooms, smaller bedrooms. They basically, redo the configuration of the house. But it's like communal living. It's like a roommate
Yeah.
situation. And then they rent it out by the room, but they take over the day-to-day operation. So it's almost like having a rooming house. And for me, I'm like, I don't want to deal with the headaches of different tenants in the same building fighting with each other and who knows what. But
Yeah.
this company, Pad Split, actually handles all the operations for you. So,
That's cool.
it's an
Yeah, I didn't
interesting
know.
concept.
Yeah, I didn't know Padsplit did that. I knew that they had like the site where you can you list your rooms. But that's really popular in Memphis because Memphis, that's where I am. It's very low income. It's, kind of a dangerous area, and there's not a lot of a lot of lower income people live here. And
Mhm.
when times get tough, or they get evicted, or they don't have a job, or they're on drugs, or whatever it is, and they need a place, they'll go to one of those rooming houses. And I know several
Yeah.
people in my investor group out here that do that, and they will
Mhm.
take out the living rooms, take out the dining room. They will minimize as many common areas as possible, and they will convert those living rooms and dining rooms into bedrooms. And they'll take a
Yeah.
traditional 3 bedroom, 2 bathroom house and turn it into 8 bedrooms. And then they'll
Yeah.
charge, they start off, someone told me that they start off with a 12-week contract first, and then it goes to weekly. And really, it turns out to be these are temporary homes,
Yeah.
and people will be there for they say a week at a time, but I guess the average is a couple of months. People will stay, several
Yeah.
months, less than a year. It's like,
Yeah.
okay, but you're getting people that are gonna, I don't really know now. I guess if PadSplit can do that, but how anybody could have properties like that and not personally manage them, because I just can see so many issues with
Yeah. Yeah.
tenants
Yeah.
fighting, and
Oh, yeah.
not
And
something
that's the
not
reason I
something I want
haven't
to
done
do.
it.
That is not worth the money for me.
Right, right. And that's where you have to know kind of your risk tolerance and your
Yeah.
ability to handle something. And, I think this is going to make me sound old, and I'm getting older, but at some point, everything that you do, different types of real estate are going to have different pluses and minuses, right? And the more time intense they are, the more they generally cash flow. But if the company like Pad Split goes out of business and you can't find another company that wants to manage it, you've put in a bunch of money to renovate a property that you're now going to have to step in and take over. And so you got to ask yourself, do I
Yeah.
really want to do that? And I had a consulting client who actually made a ton of money on rooming houses, but they spent like a significant portion of their time managing those rooming houses. And it was like they didn't have freedom, time freedom. They had a lot of cash flow, but the headaches that were required, I was like, just sell them. They had a bunch of equity, sell them, right? Because of the headache factor. And so you've got to know yourself. If you're young and you live in the area and you have no problem running over there and it's in your backyard, great. Maybe that's a way
Yep.
that you can really boost income. People do it in nicer neighborhoods near college campuses though, where they tend to rent them out for like 9 months at a time for
Right.
roommate
But then
situations. So
you're getting student housing, like
yeah,
that's a different
exactly.
quality and different type of tenant than
Yeah.
the person who needs to live for a week at a time.
Right, right. But these are just ideas of different types of things that you can do. And the
Right.
other thing is just figuring out, looking at your portfolio. This is really important, really every year. Hopefully, when you're doing your taxes, you're really paying attention to, what did my property do this year versus last year? What was my cash on cash return? And if your expenses went really high, like insurance and taxes skyrocketed, and you can't keep your rents to keep up with it,
Mhm.
then that might be a property that you decide, what, this is the time to sell because it's no longer meeting my criteria that it did when I bought it. Hopefully you've built some equity and you go ahead and sell it. Or it might be a property that you say, you know what, I haven't really cash flowed very much, but wow, I have amazing equity appreciation. And there's maybe some updates that I can make to it
Yep.
to make it cash flow better or to make it appreciate even more. And so we just did that with the beach house that we bought. This was like a drop in my lap, from heaven property that I just love. And I swear I'll never sell it. But I bought it during COVID when this resort community that it's in was shut down. And I'd already had a townhouse in this community that I waited like a year to find a short sale because I was like, I'm not going to spend the kind of money that you have to spend to be in this community. But it's very high end renter. So people come,
Right.
I'll never forget when I bought the property, the realtor, who is a funny sense of humor. He's from Boston and he was hilarious, but he said, not with all due respect, I don't mean this offensive, but like you're my probably least wealthy client in this neighborhood. So most of them buy cash. Cause I was like, I'm not buying till I find a deal. It has to be a short sale. He's like, these never short sell in this community. They're all wealthy people. Most of them don't rent them out. And I was like, well, I'm waiting then, I'm not going to do it till I find a deal. Well, he found a foreign investor who was never there, that didn't decorate it. Most people come in and they're fully furnished. So they come in and they want the best one with the best furnishings already there. So they don't have to do anything very turnkey. And
Right.
this one had white paint and mismatched furniture and it just didn't present nicely. So it
Wow.
set and set and set. So we came in and bought that one. Well, a couple years later, I was like, oh, I'd love to own a single family in the community because they have condos, townhouses, and singles.
Yeah, yeah.
So we were there, and during COVID, he called and he said, I've got a property and it's a really nice property. But there was a sell that fell through because the buyer was coming from New York City. They were selling a shopping center to 1031 into this beautiful $1 million plus single family home in this gated resort community. And the seller had a dental practice, I believe, that was shut down because of COVID. They had built another second home and they couldn't close on it till they sold this one because they had no income coming in. So they had to keep dropping the price and they needed to close quickly. Well, I said, I'll only do it if I can get them to hold a second mortgage because I would have had to put a ton of money down, and they
Yeah.
agreed to it. And so we got this great property. And today I've got probably 800,000 equity in that property in
All
4 years
right.
because I
Score.
got a great price and it's got a ton of equity, but it doesn't cash flow that well. It cash flows maybe 10,000 a year, Casey, but I mean, it's a gorgeous home, faces the water in this amazing community, and it pays for itself. And I've built equity, and I think my mortgage is like 2.35% or 2.375. So part of why I have so much equity is because I've got tremendous mortgage pay down plus
Yes.
appreciation. But I'm like, I want to maximize the cash flow. So we went the last 2 weekends and looked at the property and said, what can we do? Well, the nicer they're furnished, the more people pay for a week. And this community, we get about $6,000 a week to rent our property. So it cash flows well, but you make all your income in a 12-week period and then
Yes.
nobody rents after that. So we went back to the property and in fact, today, a flooring company's out there to measure. We're going to take out the old Berber carpet that's in the living room and put in vinyl plank flooring. We are replacing an older living room set with a newer living room set because there's two living rooms. We replaced one half last year, and then every year we take a little cash flow and put in more. But just updating the bedding, updating the lighting. We have a painter coming in to repaint, different color and make it look nice, new flooring. We should probably be able to get about $400 or $500 more per week in rental
Wow.
income just because it's a little more updated than it was before. So we're talking a few $1,000s, not major money, probably $5,000 that we're spending this
Yep.
season to make updates that are going to give us a little bit more money. And so it's important to just look at your property and say, how can I maximize the value or the cash flow? And you don't have to spend a ton of money to get it done. That's the key, is balance and
Yeah,
how much do I put
exactly.
in?
Yep.
And most of the time I look at for a 2-year payback, Casey. So if I can spend the money and raise my rents to where the new rental income will pay for all of the updates I did within 2 years, that is kind of a break even from a cash flow standpoint, but the equity appreciation may be an instant,
Right. Yep. Yeah. We bought a property last year, and you know, I don't know how it is where you are, but properties for like rentals are kind of sitting. They're not moving very quickly. They're taking a little longer to rent out. And we bought this house and it needed kind of everything, but it was in a really nice area. And we're trying to buy more in the AB neighborhoods versus the
Yes.
BC. And I'm like,
Mhm.
okay, well, this is a really good deal, but in order for me to cash flow, like I have to make the house nice, even though it's going to be a long-term rental. So when we redid the kitchen, we gutted the whole thing, and we took out, sometimes like they'll have like this in the like a half wall, and you can kind of like see the living room, and it's like this wall of hanging cabinets coming down, and it's like so stupid. So we got rid of that, and we made like a peninsula. It's like almost like an island, but doesn't go against the wall. Big, quartz slab, and slide in the stove. The range kind of goes in that section, unfortunately, but we did like the slide in with no back, and it just opens up the entire place. And we did do new cabinets and all that, but that being said, we went the extra mile because I didn't want it sitting on the market. And
Right.
properties are sitting on the market, and it was a smaller property compared to some of the other ones in the neighborhood,
Yeah.
but it was in a really good, desirable school district, and I knew it was going to be great for appreciation. It's mostly owners in the neighborhood. Like it's a solid B plus neighborhood. And
Yeah.
so we rented it out in 3 days. And
Yeah.
I had applications up the wazoo, and we did an open house style, and everyone came to see it, and tons of applications. And even while I was approving the people we had chosen, more like were coming in and more requests for showings. And like, I'm glad we did that, because the last thing that you want is to have a property and then have it sit, because there's other properties out there that are better. And
Yeah.
you don't want to keep having to lower your price to where, well, now that deal doesn't make sense.
Yeah.
Maybe it did when I first started buying it, but as you get into, as we got into later last year, properties were sitting, like they were not renting,
Yeah.
like they were, and they're now starting to pick up now, barely in March
Yeah.
things are renting out. But thank goodness, for mid-February they started picking back up, because we had another vacant rental that we finally were able to rent out. But there's
Yes.
just been so many on the market for rent, especially out in Memphis, and I know it's been like that all over the country too, because I have students have properties a lot of places. Um, so you always have to think, what can I do to my property to increase cash flow, if cash
Right.
flow is the issue, or to add
Right.
value if you want to sell it or whatever, because you never know. We're not always going to be in a time where you can rent it at top price. You may have to drop the
Right.
price. Like
Yes.
we had a vacant rental, and we had to rent it at pre-COVID prices. It's like, well,
Right.
shoot, you know,
Right.
I mean, I was renting it over
Right.
15, close to 1,600, and now I'm back at 1,495. And
Yeah. And
It's
it's
what
all
it is.
supply and demand. And
Yep.
especially like winter season, we always end up having vacants. We have very thankfully about a 2 to 2.5% vacancy rate in my area since 2007. So it's like
Oh,
very
nice.
low supply, which helps.
Yep.
But in the winter, nobody wants to move here. It's
No.
cold, it's snowy. And so if something goes vacant in November or December, we're like, okay, we're going to be 2 months vacant. And we've got to, lower our prices too, which you hate to do. And then you finally get it done. But to your point, it's the little things. When there's a lot of things available for rent, people have choices. It's all about that first impression. And one of the things that
Yes.
I learned, when I was getting started is a lot of landlords in my area had the typical antique white walls that were kind of dingy, almost had that yellow look to them, the off-white outlets, outlet covers, light switches, the old globe, boob lights in the ceiling.
Yes, I love
Um,
the food lights too.
That's my husband called them that. I was like, well, you got a point. They kind of look like that, right? But just changing the paint color, like we used to go with a gray, like a beigey color that we really liked. Now the grays are more in. So we do all of our units in repose gray. It's my favorite. It looks a little beigey, a little gray, depending on the
Yes.
lighting and depending on your furniture and the flooring. Just changing the paint color, changing all the off-white outlet switches to white, and changing the lights and maybe the faucets. Not, maybe you can get it done for $1,000 depending on how big the property is, but just doing those few things, Casey, I have a lady walk in mine and they're like, oh, it's beautiful. They love it. And they rent it like that
It's
compared
so
to
funny. We do repost gray too.
that is so fun. Hey, everybody listening, it's a good color. It works. But I mean,
Yeah.
just the paint color, I was shocked at how fast, especially women are like, wow, it's so beautiful. And it has a hint of blue. It's just a very soft,
Yep.
calming color. But
It
you
works
don't
with
have to spend a
everything.
lot of money. It works with everything. Yeah.
Yeah.
So we've given everybody some ideas for what they can
Yeah.
do to maximize their property because until we start seeing rates come down and prices come down a little bit, maximizing your property might be the most profitable thing that you can do.
I agree. Well, Anna Kelly, thank you so much for coming today. I hope everybody enjoyed, and we'll do what Zuber does. Where can people find you?
You can find me here most weeks on the show. You can find me at social media at Anna Kelly REI Mom. And if you're interested in real estate coaching or consulting, you can find me on my website, AnnaKellyInvesting.com.
Love it. And same for me. Casey Franchini is my name, but I go by Brick Wealth. I do a YouTube video every Wednesday. And if you're interested in working with me, you can go to my website, brickbybrickwealth.com. And I got to push pause.
And I'm sorry, my Home Depot measure guy is calling me. He's been called. Let me just call him real quick and see.